Good morning, traders. Thanks for joining me today. It is 8 a.m. Chicago time, 8:01 actually, on Wednesday, the 2nd of May, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's take a look at where we stand. This morning, we have a mixed bag, really. The pushers this morning are the DAX and the Euro stocks. The DAX up 1.55%. The Euro stocks up 0.55%. And the laggards today, the mini Russell down 0.3%. The Dow, the Bund is down there as well, and the S&P is off slightly. The S&P is only down 2 points, 0.08%. So far, the volume's been pretty good in the S&P, 138,000. And we had a very interesting rally yesterday off of 26.23 a quarter. We also had some numbers this morning that are having somewhat of an impact. But the big one today is FOMC. I can't go without mentioning that at 2 p.m. Eastern U.S. time, 1 Central, we get the FOMC rate decision, expecting 1.5% on the lower bound, 1.75% on the higher bound. And that's in line with the last, with the prior. Again, that comes out at 2 o'clock Eastern. Other than that, really, there's not much on the calendar. If you trade crude, of course, we've got the inventories at 10:30, and as usual, you can grab this information from any calendar. If you need a recommendation, let me know. Let's take a look at what we expected yesterday versus what we got. I'm finding that the way the action is recently, as I talked about yesterday, a little bit more tricky to read, not impossible, but you really have to keep an open mind these days. So the expectation yesterday was an open auction drop to around 26.37 or so, and then pop into the prior day's range to push the overnight high up towards 26.57. That did not happen at all. The second is an early test up. Then we would see it butt up against the 26.47 point of control. Find sellers in that area up to about 26.50. I was ready to sell that area on a first test in the morning to rotate down to 26.33 and 26.30. Again, not what happened at all. We played actually scenario number 3, which I didn't cover, but we did have an open auction. Markets ping-ponging back and forth, and it made an attempt towards the prior day's low. Towards the prior day's low. Let's clean this up a little bit more here, like that. Oops. All right, hitting all kinds of buttons. So if we just remove everything, we could. This is the prior day's low right here. It made an attempt towards the prior day's low, and then it extended the range down. The thing to note about yesterday, even though we did get pretty good delta selling on the moves down, so there and there, there and there. There was a ton of absorption going on the buy side. In other words, bids, resting bids in the market that end up trading out. So the aggression was there. It's a bit of a grind down, but there were between yesterday and the day before that, Monday, the sell-off day. There's been a fair amount of size on the bid. I posted an image of that yesterday in the CT member chat room, if you're in there, to show the size just following the market down and actually trading out. So it just seems like as price was coming down, the market was doing its job by enticing buyers to step in at the lower prices. And then we see this pop of about 17.75 points. And then we extend the range up. We have a neutral day yesterday. Not only is it a neutral day, it's a neutral extreme. We finished right on the edge of the high side. This sets us up for a run back at the MC point of control, 26.69 and a quarter above. So that's how things are shaping up from a profile perspective. The profile itself, what is it telling us? Of course, just a foundational piece of knowledge. The profile is important in that it shows us how much, it's basically a statistical histogram of how much volume went off at every individual price. So as I extend this histogram out, we get the actual volume. We can see, this is tick data here. It's as accurate as it gets. We can see the actual volume that went off at every price. And the bar represents that volume, right? So that bar there represents 5,205 traded at that price. What price is that? It is 41.5, like that. So what we're seeing is how much participation happened at every price. There's no real other good way to see that. And yesterday's profile is showing a pretty decent, a very clear low volume node here. I'm looking for some reaction. Do I have that as a stock zone? Yes, see, it's a stock zone. I'm looking for some sort of a reaction in the 2647 area this morning at the low volume node. But other than that, you could see that the volume is just up across the board. It's pretty flat, which means that the market is trading equally across these prices. Not equally, but it's trading almost evenly. There's no consensus. There's not a normal histogram. It's more of a blunt histogram of what the market's done. So what we have here is, even though we've popped up, we don't have consensus still. We're not agreeing on what price should be. Yes, the point of control is down here at 2630.50. That's the most traded price of the day, but it could have just as easily been 2640. Or it could have been 2638 right here, 37.75 actually. It could have been, the point of control could have been that. It could have been this price right here. Do you follow what I'm saying? It just isn't showing a consensus where it tests the extremes. The volume dries up at the extremes out, and it increases as we move towards what we would consider to be value. And so what that's saying, the short story is, the TLDR, this is despite the fact that we've rallied, the market does not have a base and a consensus underneath it. So we have a neutral extreme, which is a neutral extreme on the high. It still isn't being built on a good base. Now, we would love to see a neutral extreme on a profile that has a, let me clean this up, it's getting messy. We'd love to see a neutral extreme on a profile that looks like it has a point of control at the top. So we'd want to see the point of control at the very top. And then we would want to see it thin out. And then we would want to see a nice big belly down below. And that becomes your base the next day. That's the area you want to see the market ideally pull into for an entry long, most likely scale in for a continuation higher. That could play out as a swing setup. But given what we have beneath us, under normal circumstances, I'll be very bullish on any push down into this profile. The overnight low has pushed into 2643. Here's the overnight low designated with an ONL right there. See that ONL? So it's pushed all the way into the initial bounce. So it's coming all the way down to the high of yesterday morning. It could just as easily push into this big zipper right here, which is the next key support area, 2634 down to 2630, which is the point of control. So as we come into this day, yes, We do have a market that's trading inside of the range of Monday's selling day. Yes, it's a neutral extreme, but no, it doesn't have a very good base beneath it. Now, if it continues higher, that's great. But I just want to set up and let you know what the profile is saying in this scenario yesterday. Again, I'm going to be honest with you. I could sit here and tell you how I make millions and millions and millions of dollars every day and win every day and all that stuff and buy my $15,000 course. But the truth is, I just don't see, I did not see very clear setups yesterday. I traded what I call droplets, which are very, very small size to test the market. I posted those in the chat room. And I keep mentioning that because that's really where my focus is. I'm not as active on Twitter right now because we're still in the launch phase and I want to make sure everything's good. But I didn't see something that said, oh, yes, let's put on a whole unit here and let's manage this in a normal way. It's not there yet. It's been about a week of that as the market, I think, is making an adjustment here. At least that's what it's been in the past, where it starts to make an adjustment. It becomes a little more tricky to read. So with that being said, let's carry that into the overnight session, which is right here. The overnight session, we had more earnings. Market pops up and then it just drops on Apple. And that's the low. So as we pushed down, what we had is an excess low yesterday on the reopen. You can see there was no volume on that spike down. This is a 15-minute chart of the full 24-hour Globex session, or the entire Globex session. It's not really 24 hours, but you could see that there's no volume right there, right on this spike right here. So the market pops down, pushes up to mid, pops higher, goes corrective, extends the high up, and hasn't done much in the overnight session. We have 160,000 contracts, which is pretty good. That's higher than what is common. But overall, we've set up a profile that is higher. It's a multi distribution profile. It's a multi-distribution profile here. It's a double distribution profile. Basically, we have two distributions on this profile. And we are pushing now lower. We got ADP this morning and so on. It seems listless to me. That's what I'm seeing. I'm seeing it kind of... there's no clear winner here other than the fact that we are holding on. We're above yesterday's Globex session. We're holding above yesterday's quote-unquote value and point of control. In the overnight, we have pretty good volume. We're back inside of Monday's range right here, Monday's value area, and we look like we are clear to 2664.50. I'm expecting 2669 quarter, 2669 quarter in today's session at some point. If we do get this rally, that'll be my key target. So what are we looking for today? If this chart looks messy to you, it's because it's got my stock zones in it. These are areas that I'm doing business in, decision areas, so to speak. And I'm going to keep them on here because it's what I'm queuing off of. We're opening inside of yesterday's range, outside of value, above the low volume node. We're opening against the prior day's close. And so what do we expect? Again, an open auction. Again, an open auction in range. And I'm expecting the market to do the auction to do what its normal process is, which is to move lower to find those buyers, to test for buyers. And I'm expecting it to get tangled in the stock zone. I'm looking for an impulse out of yesterday's range to continue what we ended up with, and to use some of this energy to the upside. The overnight high is expected to come out. The overnight high is dead center against the stock zone, which was created from back here. This area back here. So it's dead nuts right there. I'm expecting it to fight a little bit and then get a continuation. That gives us, with that being said, it gives us about 7 points of range so far. 7 points is not really all that much. Actually, it's 47 to 64. What is that? 17 points. Yeah, okay, good. So this will be the primary scenario. Secondary scenario is, you guessed it, open auction, test higher, find sellers against the stock zone, test lower, come back down towards 26.43 quarter, and then consolidate before the FOMC. Don't forget, the FOMC is expected at 2 p.m. The expectation on the FOMC is we're more likely to push higher, and that's scenario 2. Scenario 2 digs deeper down into the prior day's range. Again, I'm going to remind you, once the FOMC is released, generally the move happens in 3 waves. Yes, yesterday's close is right here, right up here. In fact, I can put it on a chart right there. It's 51.50. The FOMC, once it's released, generally moves in 3 waves. Generally, there's a burst based on the news. There's the pullback, and then the continuation move. And this is the move that we want to trade if we're going to trade it. So as that happens, the expectation is we would get a little whipsaw, and then I'm looking for a continuation higher. That's what I have for today. You got to be patient today because it's likely to slow down and get quite choppy into the FOMC. So I wouldn't trade very much past the European close, which is at 11:30 Eastern U.S. time. From that time until 2 p.m. Eastern, you're looking at a fair amount of chop, most likely. Good luck today. Be disciplined. Your job is to find the highest probability trades. Your job is not just to trade. Okay, good luck.